So our last topic of the day is trade war. As you know, we're in a trade war with China, and this continues. And recently, there was a currency devaluation by China, which sent the stock market into their fifth biggest loss of all time.
Keep in mind the
Within a
significance
day.
of China devaluating their currency. First of all, China, we had to actually have certain regulations in place for China not to reduce the value of their currency, because they could easily outcompete with our companies that produce things here by simply making it cheaper to produce things in China by reducing the cost of their money. And so now that we're going through these trade wars, we're going tit for tat with China. We impose additional taxes on imports coming in. Well, they say, well, guess what? We're going to lower the value of our currency, so it makes it almost impossible for you to want to manufacture things in your own country. And again, now what that means to us then is companies like Apple. Well, I don't even know if I'm citing the right example of a company, but what that means for us is that it's going to cost companies that make products in China here, or make the products here in the States, will probably make less profit because all of a sudden it's cheaper to go in China or more expensive to produce things in the States.
Yeah, and once you have companies moving overseas in order to move the production of products or even workers in services, and remember, one of the key factors to keep in mind about this China-U.S. trade war is the fact that the overall world market share, China has reached the U.S. At the same platform. There was a chart that we posted a few episodes ago, and they're both competing for the world market share when it comes down to services and manufacturing jobs. However, China has been focusing greatly on services. And in fact, at I want to say maybe 20 or 30 years ago, China was probably around 80% manufacturing jobs. Mm-hmm. They're now down to 40%. So they're really focusing, and they're in high gear on services because they know they have the number of people needed in order to have massive service growth. So that's a factor that comes into play, which is why the entire China trade war, there's a lot of economists that say it's not really affecting China as much as it's affecting the U.S.
It's not affecting China at all that much because of the fact that, one, their population is so large. Secondarily, they've taken a lot of these, winnings that they've had, and they've invested it in other countries. I mean, Rwanda, for one. I mean, they've built the infrastructure of a lot of the African countries up, and now there's additional...
That's the whole goal of their, I think it's called the One Belt Initiative, mm-hmm. which they're essentially, and they have France, Germany, and a few other countries that are investing with China in this One Belt, One Road initiative. And they're essentially building infrastructure in Africa through Pakistan to essentially be able to have a direct line to Africa, because the big reality is, who's going to handle the manufacturing jobs when China is the majority services and not manufacturing?
Yeah, they're
and it's not going to be India, because India is focusing on services. Mm-hmm. It's going to be Africa. They have the number of people in Africa.
They have the number of people. They have the climate, for it. And plus, they need the help. So if they create the manufacturing jobs over there, and China's got its foot in the door already there, the United States hasn't thought out that far.
Yeah, so the trade war goes a lot deeper than what a lot of people think it's about. A lot of people think it's about, Trump versus Xi Jinping, and they think it's a beef between them two. And there's a lot more that goes into it. Now, the way our current administration has been handling the trade war, it has been heavily criticized because it 6 months ago, they said there was a 30% chance we would hit a recession in 2020. Now, with the latest currency devaluation by China, they're looking at 49% chance we'll hit a recession next year. And if there's not a trade deal done in the next few months, it's almost a guaranteed recession.
Well,
now, it's
old school thinking on our part, because we're thinking that we're still the primary consumer for Chinese goods, and that's just not the case anymore.
Correct.
They're in Africa, they're in France, they're in Europe. So the European market has been a big consumer of Chinese-made products, and then now services.
And don't forget that the Chinese people now, as they continue to become a more developed country, that they are now demanding services, they're demanding products that they don't want to make themselves.
Well, their middle class has emerged so significantly that even though they're devaluating the value of their dollar, or won in this case, they're turning around and they're buying more real estate in the United States. So
now, what's going to be very interesting to see, and
it's hedging their bets.
We haven't.
Both sides.
I'm going to pitch a new podcast that we're doing called Money Managers with Marc Guzman. Our very first guest was Jonathan Dio of Dio Wealth Management, and he brought up something very interesting on that episode. So please go over to our channels. And the episode is up, and you can watch and listen to it. But he did point out something very interesting. He says he would not be surprised if 9 to 12 months right before the next election, Trump finalizes a deal with China, and then all of a sudden, economy starts to become better again, and then he gets the political points on fixing the economy. Now, it's going to be interesting to see if that, number one, if that really happens, and number two, what kind of deal is he going to strike simply just to say that he made a deal? Because if China knows this and they know Trump needs it on a political level, they may have the upper hand in trade war negotiations. So it'll be very interesting to see. So
very interesting.